Hi everyone, welcome to a short little overview video on Cashflow Club. And first I want to share why I created Cashflow Club, then I'll share what we do in Cashflow Club. So Cashflow Club was created because we see the statistic that 80% of small businesses fail in their first 5 years, and of those that survive, 80% fail in the next 5 years. What that means is we have a 4% success rate over a 10-year period. So we created Cashflow Club because number one, we believe that that statistic is completely fixable. And number two, we believe that everybody who goes into business should have the opportunity to succeed. So we're basically here to eliminate struggle. So that's why we created Cashflow Club. We want to give you opportunities. We want to give you chances to succeed. And by the way, it's not something nebulous and hard to learn. These are simple strategies that every business owner can, must, and should implement. So we broke it down, and my background, I've got decades in the consulting, advisory, accounting space. And what I've seen over and over and over is that there are just a very few things. If we get these right, it makes everything else easier, makes a business more successful. So first things first, our goal is to create a thriving business for our Cashflow Club members. And I want you to think about what thriving business exactly means to you. So that might mean you're looking at more revenue, more profit. You're looking at more success. You're looking at less stress, less hours worked. Maybe you want more impact. Thriving business is something very personal to you. So first things first, we always ask our clients, what is your goal for Cashflow Club? What are you hoping to improve or accomplish in your business? Now, we break cash flow into three core areas, and you'll see that as the sides of our triangle in the bottom. We focus on inbound cash, outbound cash, and managing cash. So within inbound, we have three core projects, and there's three core projects for outbound and manage as well. I'm going to talk about those core projects next. So we have 9 core projects in total, and we start in a specific area depending on your business needs. Either we'll start at increasing inbound cash or decreasing outbound cash. Those are our two default starting points. Now, inbound cash, that's cash coming into the business either in form of investments or from outsiders or in terms of revenue. We don't talk about bringing in investors at this point because first and foremost, we want to make sure the business is profitable. And in a lot of cases, if the business is profitable enough and has enough cash, you don't need external investors. So my favorite place to start is looking at ways to increase the inbound cash through new revenues. And there's two subcategories there. We can either have new revenue to new clients, or we can have new products or services to existing clients. And if we're in a hurry to grow, one of the best things you can do is innovate and create new products and services for your existing clients. That is the shortest path to increasing revenue, is new products or services to existing clients. The next step is new products or services, bringing in new clients. That takes time. So it's easier to innovate and serve your existing clients first. The second thing we talk about in Cashflow Club is accelerating inbound cash. And that's just looking at your current cash flow cycles and figuring out how do we get paid quicker. So if you're a service company, could you break your product or service down? Could you get paid installments? Could you get paid monthly, weekly, whatever it is? But the biggest one with a lot of service companies is getting invoices out there faster so that we get paid faster. The final thing, the final project under inbound cash is to systemize our inbound cash process. So Systemize, that can tie into how do we innovate. It can tie into our marketing and business development, and it can also tie into our collections and how we invoice and get paid. So those are the first three projects. I personally find them the most useful, and I use them most often. Now, the reason for that is if we get more cash coming in, it buys us a little freedom to figure things out. Now, if you're really up against the wall and you're worried about, will I make payroll in the next 30 days? You can look at outbound cash. Again, my default is inbound cash because it's very motivating, it's exciting, it's fun. Outbound cash, you're just managing the cash going out. I'd rather focus on bringing in more cash. So when it comes to outbound, the first thing we do is decrease. And what we're looking at is return on investment. Where are we spending our time, money, and can we decrease the outflow of cash? So that's budgeting, you're cutting costs, you're negotiating. We go into a lot of detail on all of these things, but I just want to introduce it very quickly here. Under Decelerate, we're looking at negotiating with vendors and finding ways to preserve the cash that we have coming into our bank account. We want to send it out as slowly as possible. So we're looking at vendor terms, vendor negotiations, things like that. And then the third piece, once we've kind of looked at our major expenses and we've looked at how cash goes out, we want to create systems and processes to optimize first our budgeting process, second, our spending process. So there's a little bit of a look at how we budget and also how we can preserve cash. And then under the manage, we have three wonderful little projects. And for the record, until we've solved and we're comfortable with inbound and outbound, we're not going to get too worried about manage. But once we start to see results in inbound and outbound, then we start to look at manage. So the three categories are saving. And in saving, what we're looking at is what's our short-term working capital? What cash do we need in the bank for the next 30, 60, 90 days? And where should we be putting that so we have access to it, but also so that we can monitor it and make sure we have that short-term 3-month window of expenses. So that's saving, and that's the first of the three, because if we don't have our 3-month cash flow, we're not going to get into the other areas too deeply. Borrowing is the next one, and that's just making sure we're borrowing the right money for the right things. So debt is not inherently bad if it's used properly. We want to borrow to buy assets, and we want the right borrowing to go along with the right assets. So if we have short-term assets that will turn into cash within 30 days, we should have short-term borrowing like a line of credit. If we have long-term assets like a building or a vehicle, we should have long-term borrowing that matches that. And then finally, and this is, I think, where we start to see the thriving business really taking off, we have to focus on investing. So if we're managing our cash flow with intention, we're building a thriving business, we should have surplus cash that we need to invest. And we want to make sure that the investing goals we're using tie into our long-term plan. They meet both our business goals and our personal goals. And that is the Cash Flow Club. So I'd love your comments below. Which area in your business do you think you'd like to work on first? Thank you.